Retail giants like Walmart, Home Depot, and Target, as you can see there, are scheduled to report their earnings throughout the course of the week as investors continue to gauge the state of the consumer. Our next guest says the outlook is bleak going into the holiday season as rising inflation weighs on the consumer health, with low-income consumers getting squeezed the absolute most. For more, let's bring in Jihan Ma, the senior analyst over at Bernstein, who covers many of these retailers. Jihan, thank you very much for being here. Let's talk, first of all, about why you are so negative or pessimistic about some of these retail names heading into this all-important holiday shopping season.
Yeah, I would say, first of all, I would probably call it cautious rather than outright negative, because there's reasons to be hopeful for next year. But if we just focus on this year between now and year end, I mean, while you've got inflation still going up on the back of tariff-driven cost increases, labor market appears to be softening. The low-income consumers are in particularly the worst shape right now on the back of the lower spending power they have, as well as the government shutdown that temporarily at least delayed SNAP payment. On the top of that, we're lapping a pretty strong holiday season, especially from a discretionary sales perspective from last year. So unfortunately, I don't have too much good news to report in the very near term.
All right, so let's talk about okay, so that's the holiday shopping season. Let's talk a little bit about the earnings setup for these reports coming in. Let's go good news first. Are there any retailers out there that you feel as though are well positioned going into their prints this week for their earnings reports who could come out exceeding expectations?
Not as much this week, I would say. In my coverage, I think Five Below is the most likely to beat consensus expectations. They report in 2.5 weeks' time. They're still holding up really well on the back of some macro tailwinds, as well as company-specific turnaround. For this week specifically, unfortunately, we've got some big retailers reporting. Sentiment has been fairly cautious into this reporting cycle. I think Target is probably the most likely to miss. Within my coverage, that's to report this week. They're still not out of the woods yet from a underlying trends perspective. And I feel like, consumers are increasingly finding Target to be a nice to have rather than a must have. So that's still something they struggle with. Sentiment still fairly cautious on home improvement this quarter. And then I would say I expect Walmart to have a fairly in-line quarter, but at the valuation they're trading at today, there isn't a ton of upside, right? If they report a fairly in-line quarter, I don't expect there's to be a lot of upside compared to the stock price today.
Can we talk about some of the big boxers out there besides Walmart and Target? What about Home Depot, Lowe's, and maybe even Costco for those folks out there who are kind of looking at what these types of companies can tell us about the health of the consumer as well?
So for Home Depot, Lowe's, I think for now it's still largely a macro-driven story, right? Unfortunately, both stocks have been kind of flatlining for the past year or so. I mean, they have both comped in a fairly muted way so far. I would expect both companies' results to be non-inspiring going into tomorrow and Wednesday. Now, a lot of focus is going to be on where rates go from here. What does that do to housing turnover? And what does that do to home improvement demand from here? On the other hand, Costco doesn't report until later this year. They report, I think, in the second week of December. There's going to be more clarity around what Costco is going to report because they provide monthly sales. So we're going to have some more additional disclosures from Costco from here. They're still holding up just fine, partly because they have more exposure to the middle to high income consumers who are holding up a lot better compared to the low income cohort.